Good morning and welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends, and market movers. It's Thursday, July 17th. I'm Nelson John. Indigo's engine troubles in the skies. Tsunami warning in Alaska. Ola stock jumps back to life. SBI's raising billions and India just hit a climate goal 5 years early. We unpack it all on Top of the Morning. It all started when the captain radioed, "Pan, pan, pan." The urgent radio call used by pilots when something goes wrong but isn't immediately life-threatening. And that's exactly what the captain of Indigo Flight 6E6271 from Delhi to Goa declared on Wednesday evening after one of the engines developed a snag midair. The Airbus A320neo carrying 191 passengers had just taken off from Delhi when the issue was detected about 100 nautical miles north of Bhubaneswar. At 9:32 p.m., the crew requested an emergency diversion to Mumbai. By 9:35 p.m., the flight had landed safely at Chhatrapati Shivaji Maharaj International Airport, where fire tenders and ambulances stood ready as per protocol. All passengers were safe and the aircraft has been grounded for detailed checks. Indigo arranged alternative aircraft to ferry the flyers to their final destination, Goa. But it's not just this one flight. Indigo has had a string of technical troubles lately. Just last week, a Patna-Delhi flight had to turn back midair due to a bird strike. Another Indore-Raipur flight returned shortly after takeoff due to a technical fault. And bad weather in Delhi on Wednesday saw at least 5 flights diverted due to rain and strong winds. India's busiest airport, Delhi IGI, handles over 1,300 flights daily. But when it rains, it really pours, especially this week. The silver lining, no injuries. But for Indigo, it's been a week of emergency calls, diversions, and damage control. This is not a drill. That's the chilling message from Alaska after a powerful 7.3 magnitude earthquake rattled the ocean floor just south of Sandpoint on Wednesday, prompting immediate tsunami warnings for parts of the Alaskan peninsula. The quake struck at 12:37 p.m. local time, with the epicenter located about 54 miles south of Sandpoint, a small island community. According to the U.S. Geological Survey, it originated just 20 kilometers deep, shallow enough to potentially trigger tsunami waves. The National Weather Service quickly issued a tsunami warning for coastal areas between Kennedy Entrance and Unimak Pass, including Cold Bay, Kodiak, and Sandpoint. Authorities confirmed tsunami waves had been detected, warning that some impacts are expected. While no alerts were issued for areas beyond the zone, the region's high seismic activity keeps residents on edge. Alaska sits on the Pacific Ring of Fire, the world's most earthquake-prone zone. It's also where the 1964 megaquake, a staggering 9.2 magnitude, unleashed deadly tsunamis that killed over 250 people across Alaska, the U.S. West Coast, and Hawaii. This is the second major quake in the region in 2 years. A 7.2 magnitude tremor in July 2023 thankfully didn't trigger a tsunami, but the tremors are a stark reminder. Alaska is always on edge. As of now, emergency services are monitoring this situation closely. Residents in the warning zones are urged to stay alert, follow evacuation orders, and keep an ear out for official updates. After months of turbulence, Ola Electric may finally be flipping the switch. Despite revenues halving and losses widening in the latest quarter, investors cheered as Ola Electric stock jumped nearly 20%, a rare spark after losing over half its value since listing. So what's changed? A fresh focus on profitability. June marked the first EBITDA positive month for Ola's auto business, driven by stronger sales of its premium Gen 3 scooters, better margins, and leaner operations. While the company still fell short of its 25,000 monthly unit break-even mark, improved operating leverage and a slowdown in spending helped Ola edge closer to turning the corner. But the road ahead isn't smooth. Quality issues, delayed registrations, and regulatory setbacks, like the recent closure of stores in Maharashtra, have dented Ola's image. And while rivals like TVS and Bajaj catch up, Ola's market share has dropped from 50% to under 20%, reports Mint's Ananya Roy. Meanwhile, its battery cell manufacturing ambitions under India's PLI scheme have been scaled back to focus on cash flows over compliance. Now, this could possibly invite penalties, but it preserves capital. Management remains upbeat, forecasting up to 4,700 crore rupees in annual revenue and positive cash flows by FY26. But with just 828 crore rupees clocked in Q1, that's a big leap. Investors are watching whether Ola's turnaround is real or riding on hope. As one analyst put it, there are green shoots, but they need to grow into a tree. We're ready if the market is. That's the signal from India's largest lender. State Bank of India is gearing up for a massive 45,000 crore rupee fundraising drive in FY26, eyeing both bond and equity markets. On Wednesday, SBI's board cleared plans to raise 20,000 crore rupees through Basel III compliant bonds, AT1 and Tier 2. Simultaneously, the bank launched its first QIP since 2018, setting a floor price of 811.05 rupees per share. So, why the cash chase? SBI wants to keep its capital cushion strong, even if it doesn't immediately need the funds. Its current capital adequacy ratio stands at 14.25%, comfortably above the 12.1% norm, but still trailing rivals like HDFC Bank's 19.6%. Market watchers expect SBI to dominate the bond scene this year too, just as it did in FY26 with 27,500 crore rupees raised via bonds. But there's a twist. Experts predict FY26 will see muted bond issuance due to slower credit growth, surplus liquidity, and shaky appetite for AT1s, especially after Yes Bank's 2020 bond debacle. So what's the fallback? QIPs. Public sector banks are increasingly leaning into them, not just to strengthen capital, but to help the government meet its disinvestment goals. Recent examples include PNB, Bank of Maharashtra, and IOB, all tapping the equity market to dilute public holdings. SBI, it seems, it is keeping all options open, ready to strike when the value feels right. India has crossed a major climate milestone 5 years ahead of schedule. On Wednesday, the Union Cabinet announced that over 50% of the country's installed power capacity now comes from non-fossil fuel sources, fulfilling a key target under the Paris Agreement well before the 2030 deadline. This shows that development and decarbonization can go hand in hand, said Union Renewable Energy Minister Prahlad Joshi. With this, India inches closer to its 500 gigawatt renewable energy goal by 2030 and net zero emissions by 2070. As of June 2025, India's total power capacity stood at 484.8 gigawatts, of which nearly 234 gigawatts, about 48.3%, came from renewables like solar, wind, and large hydro. Including nuclear energy, the country has surpassed the 50% non-fossil benchmark. But there's more. The cabinet also cleared big investments to accelerate green energy expansion. NTPC has been cleared to pump up to 20,000 crore rupees into renewable projects via its green arm, while NLC India Limited has been granted special exemptions to invest 7,000 crore rupees in its green energy ventures. However, experts say the next big challenge is increasing the actual share of electricity generation from renewables, which still lags behind. Solar and wind together contribute only about 13% of total electricity generated. Still, as Avantika Goswami from CSE puts it, India's progress signals intent and action. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest news. Until then, this is Nelson Johns signing off. Have a great day.